Hi everyone, this is Ishika Bhattacharjee, and today I am going to continue AI application in business in the finance part. So let's look forward. So this is the business overview which I have given already. Let's go to the finance part. So see, finance is one of the most data intensive sectors in the world. Every second, banks, fintechs, and investment firms generate millions of transactions, stock price updates, loan applications, and economic signals. Handling such volumes of data manually is impossible. This is where artificial intelligence comes in. AI can analyze vast data sets in real time, detect patterns, make predictions, and guide decisions all far faster and more accurately than human analysts. So that's why today we are going to explore three major applications of AI in finance. The first one is fraud detection, then comes the algorithmic trading, and finally risk assessment. So each one of these applications demonstrates how AI transforms operational efficiency, decision making, and customer trust in financial systems. So let's move forward with the first one, which is fraud detection. So, a critical area where AI has saved billions of dollars. Fraud can occur in countless ways, right? Like stolen credit cards, fake identities, unusual transfers. Now, traditional systems relied on static rules like flagging transactions over a certain amount. But fraudsters quickly adapt. So they have the solution for their own problems. So now AI changes the game by continuously analyzing millions of transactions in real time, learning patterns of legitimate behavior and detecting anomalies instantly. Now, for example, if a user in India suddenly makes a transaction from a European country within seconds of a local purchase, AI flags it. Consider a MasterCard or Visa. Their AI powered system can identify suspicious activity within milliseconds, often before the customer is even aware. And similarly, PayPal uses machine learning to detect fraudulent payments automatically. This is protecting both users and merchants. So the benefits are very clear: faster detection, reduced losses, and increased trust. But the challenge lies in balancing sensitivity and accuracy. So too many false positives frustrate customers, while if too few allow fraud to slip through. Now AI systems must continuously adapt to new fraud tactics, learning from the historical data and emerging patterns. So this is all about fraud detection. Now next is algorithmic trading. So also called algo trading. Now, in financial markets, there are extremely fast and volatile, right? Prices of stocks, commodities, and currencies fluctuate in just milliseconds. Human traders, no matter how skilled, cannot analyze and react to every piece of market data in real time. Now, this is where AI excels. It can process massive amount of historical and real-time market data and can detect the hidden patterns and execute trades automatically. Now, for instance, Goldman Sachs and Morgan Stanley use AI-driven system that can react to minute market changes faster than any human, or robo-advisors like Betterment or Wealthfront use AI algorithms to automatically adjust portfolios, ensuring investments are optimized according to market conditions and client goals. Now, algorithmic trading reduces emotional bias in trading decisions. Also, it increases the speed and identifies opportunities human might overlook. However, it is not without challenges. High frequency trading can create market volatility. Now, the models require accurate, high quality data, and a small error in the algorithm can have a large financial consequences. So, these systems are heavily monitored and continuously updated. Now, this is all about algorithmic trading. Finally, we come to risk assessment. Financial institutions are constantly exposed to potential losses from loan defaults, insurance claims, or investment risks. Now, traditionally, risk evaluation relied on human judgment, like credit scores and historical records also. This is useful, but this approach is limited in scope and speed. So now AI transforms risk assessment by analyzing structured and unstructured data like credit histories, market trends, economic indicators, and even social media sentiment. Uh, they do that to predict potential losses or defaults. Now, for example, Zest AI uses machine learning to predict loan default risk more accurately than conventional credit scoring. Insurance companies like Lemonade leverage AI to detect fraudulent claims and evaluate risk very quickly. Now, essentially, AI produces a risk score for each decision, allowing institutions to act decisively while minimizing the exposure. So, the advantages are significant: faster decisions, improved accuracy, and reduced losses. That's what we want. Yet AI is only good as the data it receives. Unexpected event such as market crashes or any global crisis can still challenge even the most sophisticated AI models. Hence, human oversight remains critical. Now, if we look at these three applications together, a clear logic emerges. First, AI protects assets through fraud detection. Then, it optimizes returns through algorithmic trading. Finally, it evaluates potential risks to ensure sustainable growth. In other words, AI in finance forms a closed loop system. It safeguards funds, intelligently invests them, and continuously evaluates exposure. This cycle allows financial institutions to operate efficiently, make the data driven decisions, and build trust with customers. Consider a bank today. Every transaction is monitored for fraud. Investment strategies are partially automated with AI, and credit or insurance decisions are guided by predictive analytics. This integration of AI ensures that operations are faster, safer, and smarter. And this is benefiting us. So, to summarize, AI in finance is no longer optional, it's kind of a necessity. It prevents fraud, automates trading, and predict risks, enabling institutions to handle massive amount of data with precision. The real impact is measurable: reduced losses, optimized investments, quicker decisions, and increased customer trust. As we move forward, AI will continue to shape financial services not by replacing humans, but by enhancing human decision making, allowing financial professionals to focus on strategy and analysis and innovation rather than repetitive tasks. So, in essence, AI act as a digital financial advisor, trader, and security expert combined, making modern finance faster, safer, and smarter than ever before. So, this is all for this discussion. Thank you so much.